And now let's move a little more south. Mexico we covered already, but we will go a little bit more in detail with our next speaker. We're covering the next region, South America. Always good for the good, the bad, the ugly. So it's such a diverse economies that you will cover. Take your time, we're not in that rush, and we're really curious to hear everything. Our next speaker is Dr. Walter Molano of BCP Securities. He's a managing partner and the head of research of BCP. Welcome to our forum.
Thank you very much for the invitation. It's a pleasure and honor to be here, my first time. And I am going to talk about Latin America, but the thing is I'm going to really talk about oil. And the thing is, the reason why I'm going to talk about oil is because Latin America is very much a commodity producer. It's very much contingent and dependent on what happens on commodity prices. In fact, what was it, about 14 years ago, back in 2001, we were about to turn off the lights on Latin America. The 1980s was known as the lost decade in Latin America, and we thought that in 2001 we were going to repeat the lost decade. Argentina had just defaulted on its foreign debt. Brazil had just elected the worst nightmare of a candidate that you could have, Lula, which everybody was, dreading. Uruguay had defaulted on its debt. Ecuador had defaulted on its debt. Colombia needed a $12 billion bailout. Brazil needed a $40 billion bailout. The region was really on a knife edge and about to go over. And then now, 14 years later, Latin America seems to be booming. If you go down to Latin America, you see, new skyscrapers and new cars on every single road, and you see all sorts of new housing. What happened? What happened in those 14 years? It isn't that they all of a sudden became honest. It isn't that they all of a sudden became efficient or they became very productive. What happened was that in August of 2001, China became a member of the WTO, and in the span of very few years, China became the factory of the world. And so as China and its 1.3 billion inhabitants became much more prosperous, so did Latin America. Latin America is a major commodity producer. It produces 40% of the world's soybeans. Chile produces or exports something like 40% of the world's copper. We can go down the list. When we look at oil production, it produces almost as much oil as Saudi Arabia in conjunction, not individual countries. So it's very much a commodity story. And so having a good handle on commodities is really what you need in order to understand what's going to happen in Latin America. So this is what we're trying to look at, and this is what really has fixated my clients, and that is the plunge in oil prices. And the question is why? And trying to understand why and coming up with a theory with why then will help us understand what's going to happen in the future. Everybody says, I tell my clients that oil analysts are like like Plato's allegory of the man chained in the cave. If you ever remember that from college, there's this allegory of this man who's chained in the cave, chained to a cave wall, and he sees on the other wall these shadows of what's going on outside. And so he tries to fit different stories to explain the shadows, and I think that's what oil analysts do. They see the price move, and then they try to invent a story as to why the price moved. And so we've had all these explanations as to why the prices have moved, and we've been told that we're drowning in a sea of oil, and inventories are definitely going up, but if you look at inventories, they're kind of within the range that we've seen before. It's not like they're off the chart. When we look at global oil production, we've been told that we're drowning in a tsunami of oil, and we don't know what to do with it. When we look at the numbers, it's not exactly a tsunami. To me, it looks more like a ripple. But the thing is that in the last 5 years, we've increased global oil production by 5.5 million barrels per day. It's about 1 million barrels per day per year. Not exactly a tsunami. And when we look at it, the big increases were back in 2011 and 2013. Last year was the smallest increase in oil production that we've seen since 1953. So again, not exactly the tsunami. Fracking. Everybody now talks about fracking. I remember talking about fracking 3 years ago, and I was told to shut up because nobody really cared about fracking. They said fracking, honestly, Walter, back then it was about 2.5 million barrels per day. You're talking about a global, production of, about 87 million barrels per day. It's a drop in the bucket. The drop's a little bit bigger now. We're about at 4 million barrels per day, but it still is pretty much a drop. And when you take a look at the fracking picture, you notice that the big increases were, again, back in 2011, when we had that big increase in global oil production, and where prices were still steadily going up. And when we look at the fracking production in the last months of 2014, you actually start seeing it leveling off. This is from and I'm sorry it's kind of small, but this is from Bloomberg Magazine, and it shows the untapped well inventory, so wells that aren't producing. And if you look back, and I'll provide this, it'll be on the website. Actually, the slowdown in fracking did not start this year. It already started happening at the end of 2013 and 2014 for a variety of technical reasons. So then we talk about Iraq. That Iraq is also the other reason why we've seen the big plunge in oil prices. Well, actually, Iraq production has been declining in the last year because of all the problems that we read about every day. ISIS, the turbulence that's going up in Turkey and northern Iraq. How can you have an massive increase in oil production, meanwhile, a third, and especially the oil-producing part of the countries, is up in flames? Iran. This is a possible risk, but when we take a look at Iran production, we've seen it decline dramatically. Everybody's kind of now on pins and needles whether Iran production is going to go up, and there's a good chance that it'll go up if this deal is finalized. I still have my doubts, and we could probably have a whole new presentation on a debate as to what is the future of Iran. So that's the production side. So we have supply, and now let's look at demand. When we look at Chinese oil demand, what we see is that the Chinese have been steadily increasing their oil demand in the last 5 years. The increase, remember, the increase in supply was about 5.5 million barrels per day in the last 5 years. The increase in demand just from one country was 2.5 million barrels per day, about 500,000 barrels per day per year. When you take a look at the total oil production, China consumes about 10 million barrels per day. We're going to see it in a couple of slides. What U.S. oil demand is, it's 20 million barrels per day. China's got 4 times the population of the United States, and it consumes half the oil. And the potential for that growth is very large. Here's automobile sales, and again, I apologize, the numbers are kind of small, but when we take a look at it, in the 1990s, average auto sales in the United States were 4.5 million units. Last year, it was 17 million units, so it went up, in the last 20 years, 25 years, at a rate of about 10%. When we take a look at China, we see that Chinese auto sales in the 1990s was 430,000, okay? And when we take a look at auto sales in last year, then we're talking about, what is it there, 34 million units. So we're talking about significantly more than in the United States, and again, with 4 times the population. So the growth in auto sales is just booming in China. And when we take a look at auto penetration, in the United States, we have 809 units, autos per 1,000 individuals. In China, we have 101. So we have 8 times more the autos that they have in China. And when we take a look at India, we're talking about 18 cars per 1,000 persons. So the thing is that there's huge untapped potential there that is still growing. And it's 2 parts of the world that are just becoming much more affluent as time goes on. So this whole concept that we're headed towards a low oil, or low oil price environment, I think is kind of more like, again, the prisoner watching the shadows on the wall and trying to fit a story that really looks or explains what's going on outside. When you look at U.S. oil demand, yes, it's down a little bit, 500,000 barrels per day in 5 years. I think this is going to be reverted very quickly as oil prices come down and everybody goes out and buys SUVs and bigger trucks. Just take a look at the announcements out of Ford and General Motors. All they're doing is selling bigger trucks as oil prices then came down. We're talking about 500,000 barrels per day out of 20 million barrels per day. So it's not exactly very significant, and it's within the range of variability that we've seen in these last 5 years. So therefore, why did oil prices come down? Okay, what's the real story behind the shadows? I think it's this. Okay, it's a very busy chart, and I apologize, but the two most important lines are the top 2 lines. These are daily oil imports into the United States by country. The top one is Canada, and the second one, is the red one, is Saudi Arabia. Starting halfway through last year in 2014, the Saudis lost half their market share in the United States in oil imports to the Canadians. And I think that's what put them off the edge, okay? I think that's what really, sorry to say, pissed them off and said that they were losing market share to very expensive oil producers, such as oil sands, such as shale, such as deep water drilling. And they said it's time to get rid of the competition. And we're going to do it the old-fashioned way, the way that the Rockefellers taught us 120 years ago, and that is you just drop the price and drive the competition out of business. And so as a result, then they increased their production by 1.3 million barrels per day, and we have what we have now. And we have oil prices that plunged, and when you have companies like Shell that are buying up BG, and you're going to have enormous amounts of consolidation, but it's going to be short-lived. Of course, the Saudis are going to come out and say that oil prices are going to be below $100 a barrel for the foreseeable future. I would be saying the same thing if I'm trying to drive the competition out, but I can assure you that we're going towards higher oil prices. What's the floor? A couple of months ago, Goldman Sachs was saying it was going to hit 30. Some people were even trying to beat them and say it's 20. Well, the oil price is here, okay? This is a graph from Bloomberg. It's just a grab and just a cut and paste. And what you see is that as oil prices are coming down, the bottom bar graphs are trading volume. There was no trading volume. Nobody wanted to catch that falling knife. But the market then started coming to life when the market hit $45. And then all of a sudden, as you see towards the right side of the graph, the market comes alive and then just keeps on roaring ahead. That's the floor. It's not 30, it's about 40, 45. Where are we headed? I think this is a very similar situation to what we had in 1986. 1986, after President Reagan signed the Riyadh Accords, which had many purposes, including driving the Soviets out of business, which I think that there's some of that, except it's not called the Soviets, it's called the Russians, or the Russian Federation. But if you take a look at the graph with the price graph of today, they're uncannily similar. Okay, it was a 60% decline in price. The Saudis increased their production. They cut prices, very similar to what we're seeing. And what they did is, one, thanks to them, the Soviets, which were a major oil exporter, went out of business. And soon enough, we had a fall in the Berlin Wall. And then we had a rapid recovery in price. In fact, within 3 years, prices were above where they were pre-crisis. And so I know that conspiracy theories aren't really very vogue, but I still believe in conspiracy theories. And so I think that this was, an agreement that was made between Riyadh, with Washington, and also with the majors which have, front door access to Riyadh, to the different oil ministries, have benefited enormously because this is an opportunity for them to consolidate. And so you're going to continue to see much more acquisition of the poor, of the weaker type of competitors, like we saw Shell with BG. So what's the impact on Latin America? A lot of talk about oil, not that much about Latin America. Here's where we get to the Latin American part. Here's daily oil production out of Latin America. What we see is it's driven really by three major countries, Venezuela, Mexico, and Brazil. Between the three countries, they produce 9.4 million barrels per day. Again, almost as much as Saudi Arabia does. When we look at the exporting picture, it changes dramatically. What we see is that there's still top three, but one of the three disappears. Brazil disappears, and we replace it with Colombia. Colombia has become a major oil producer. Colombia produces about 1 million barrels per day and exports about 70% of it, or 700,000 barrels per day. Venezuela still continues to be the elephant in the china shop. It accounts for half of the daily oil exports from Latin America, and Brazil disappears because Brazil is a net oil importer, and Mexico still remains very important, 26%. Again, I apologize for the small print, but here you just have a breakdown, numerical breakdown of the different oil productions per country and also the net oil positions per country as well. What the impact is on their trade and current account balance and what the impact is on inflation. Overall, this is going to cost Latin America about $50 billion in current account. And so the region is suffering as a whole, although there's winners and there's losers. Some countries, like the Caribbean countries, are actually benefiting enormously from this. The country that's benefiting the most is Jamaica. The impact from the decline in oil prices represents an 8% of GDP current account improvement. So this is one of the reasons why Jamaican bonds have actually been doing very well in the recent times. As far as Latin America goes, the growth is very abysmal this year. GDP growth is going to be close to zero. And this is because some of the countries are really going through a tough time. Brazil is doing a very large fiscal adjustment. It's going, GDP growth is going to be about -1.5%, which actually is a good thing. This is what we need to kind of go through when we go through a belt tightening scenario. The other country that's feeling the pinch is Venezuela. Venezuela doesn't want to devalue for a variety of reasons. It has elections at the end of this year, and so it doesn't want the inflation boost. It doesn't want to raise gasoline prices. Domestically, gasoline is really free. It costs 12 cents to fill up a car in Venezuela. So they actually pay the gasoline station owners to distribute the gasoline because there's no money in selling gasoline. So what the Venezuelans are doing in order to try to balance their books is that they're just restricting imports. It's kind of like a devaluation without moving the currency. What you do is you ask everybody to submit their permits for imports and you deny them all. So they went from imports of $72 billion a year back 2 years ago, and imports are going to be under $25 billion. So it's a very severe draconian type of adjustment. It does lead to something called the import substitution effect, and so a lot of products that before were imported in Venezuela are now being made domestically. But because of this draconian adjustment, Venezuela is able to muddle through. It has about $5 billion in amortizations coming due this year, and it looks like they will be able to make them. And then last of all, the current account. Current account deficits in Latin America have deteriorated enormously. You know, they're almost $100 billion, they're about $90 billion, and this has been due because of the decline in oil prices. Other commodities have also declined. We've had declines in iron ore prices, which have affected Brazil. We've had a decline in copper prices, which have affected Chile and Peru, and so overall the region is suffering. Does this mean that we have to shut off the lights in Latin America? No, absolutely not, because we have another major event on the horizon. I don't know whether close on the horizon or a little bit further out on the horizon, but that's going to be the reincorporation of India. Back about 20 years ago, the two of the poorest countries on the planet were China and India. Those two countries represented, at the end of the 1980s, or a little bit more than 20 years ago, represented 8% of global GDP. To put things in perspective, in 1830, those two countries represented 70% of global output. So the thing is, they went from the most important, richest parts of the world to the poorest parts of the world. Now China has reincorporated itself into the global economy, and the next one that will do so is India. Yes, there's a lot of challenges for India to do on the regulatory front and whatnot, but the world needs India because the world needs a new factory, really, for its manufacturing hub. Because of China's one-child rule, the demographics in China is moving very much against it. And so as a result, we have a declining population, an aging population, while India never had any of those types of restrictions. So therefore, as wages continue to increase in China, then we're going to have to move that production to another part of the world, and that cheap part of the world is going to become India. So India is going to follow in the footsteps of China. It's going to modernize, it's going to rebuild its infrastructure, it's going to put in new trains, new cities, new buildings, all sorts of new stuff. How long is it going to take? It may take some while. It took China a long time to do so. But when it does so, then Latin America is again going to be able to benefit from that type of transformation. And that is going to be a very important moment and phase for the region. So with that, then I'll just leave it. I think I've got a slide, yes, on my book. If you're so inclined, it's on Argentina, which I think is kind of the flavor of the day. It's called In the Land of Silver. You can get it on Amazon. And anyway, I think it's a very good read. Thank you very much.